Hey guys, man, what a week. This has been a crazy week. It's been a fun week. It's been an up and down week, but that's why I love the market. It's so unpredictable, but whenever we finish positive, it's always a good feeling. So, we're going to talk about our week here in a minute, kind of recap the day, see where we ended up, and set us up for next week. But what I want to tell you today is you have everything you need to be successful. You. You're all you need. No, don't let yourself down. Don't put yourself down. Everything you need to be successful is inside of you. Now, yeah, a lot of times we need people to help pull it out of us. We need people to help us find our way out. We suffer a lot from low self-esteem, from doubt, from fear. These are the things that we need to help, that others can help us pull out of ourselves and get out of that so that we are confident and we do find things to believe in ourselves and we can get to where we want to go. But the main thing is we have to value ourselves enough to come in and grind and put in the work every day. We have to value ourselves. We can't come in and expect other people to give us everything. That's not what it's about. It's about coming in, learning what you need to learn, putting in the work, valuing yourself and your ability and your dream, your vision. The only person that's going to put value in that is you. And come in every day and do it. A lot of times we want to hold other people accountable for our success or our failures. And we touched on this before. We can't do that. We want people to give us guarantees, but we're not willing to give ourselves a guarantee. Are we going to hold ourselves accountable for doing what we need to do to make it happen for us? Are we going to put in our work? So if you're going to hold somebody else to the fire, then you got to hold yourself to the fire. And you got to look yourself in the mirror and say, hey, what didn't I do? Did I give it all I had? Did I give it 110%, 120%? And if you're comfortable and you believe that you did that, then you can start looking outside of yourself. But just know everything you need to be successful, you got it. It's in you. If you need help bringing it out, you look for people like me. You look for other mentors, other people that have been through the fire, who's done this, who's been successful at it. Some of you guys have read my blog that I started back in 2014. I journaled myself my whole way up the ladder. I segued from the written journal to the video journals, but you go back and you'll see it. My blog is still up. Go to my website at AverageJoeTrader.com and click on the blog. It'll take you right there. So I've been through it, and I know you got it. It's in you. Sometimes you just need that somebody else to help drive you, to lead you down the right path. And that's exactly what I'm trying to do to help you guys. All right, so yesterday was an incredibly crazy day. I'm not going to even try to recap it. I didn't do a reflection. I made a decision that I'm just not going to do that because it would take me 3 hours or more. I had 40 tickets yesterday. 40. And I never, ever trade that much. But man, I got going. The market started tanking, and I got excited. I traded. What did I trade? TVIX, Apple, Facebook, just everything, trying to take advantage of that damn volatility in the market selling off. But it was crazy. I got in TVIX, and if you guys were in the room, You heard me telling you I never shook that hard in like the last 2 or 3 years. I mean, my hands felt numb. They were shaking because that volatility was it was getting me. And so it was just a crazy day. I did take one snapshot before the power went out. If you were there late in the afternoon, you heard the storms that came up, and my power did eventually get knocked out for a while, but I was able to take one snapshot. And the only reason I took this is because I am keeping a journal specifically for the opening range trades. I'm gonna do some extra studying on it just to kind of look and see if I can notice if there's anything changing. I mean, they're working great. They don't work on every stock, but they're not supposed to. No strategy works on every stock, but this strategy works. And if you execute it properly, you may get a winning trade, you may get a losing trade, but the strategy is solid and it works. And you shouldn't be focusing on win-loss percentage. That's the dumbest thing you ever could focus on. What's my accuracy for this week? The accuracy you need to be focusing on is not your win-loss ratio. The accuracy that you need to focus on is your execution, because that's where we can be perfect. We have no control over our win-loss ratio. We have a little bit of control over it, but we don't have full control over that. We do have full control over our execution, and that's where our focus needs to be. That's how I can tell. That's one of the reasons I can tell whether somebody's actually trading or somebody's just paper trading. Because if you're sitting here worrying about your accuracy and you're only taking, a couple of trades a week, you're not trading for real. You just can't. You're not. And I'm not saying you're not trading real money. That's not what I'm saying. I'm saying you're not really trading. If you want to trade, you're going to have to engage yourself in the market and stop worrying about not having losing trades, because that is handcuffing you and that's going to hold you back. Let me stop because I can go on that. But here's yesterday, this was the opening range breakout we took. This was a 3-minute. This is the 5-minute, first 5-minute candle. I'll exit if the price action dictates. I will enter on a 3-minute candle, but I'm going to manage my trade on the 5-minute, and that's exactly what I did here. I got in off the 3-minute, and I started covering at my predetermined profit targets, and I just missed this by a couple of cents. So that's gonna happen sometimes, and it pulls back, and I ended up, taking a profit stop here. I wasn't gonna let it go any further. Now, yeah, it could have bounced here, but if it did, I could have added back, which is what I did here. And there's nothing wrong with this add, absolutely nothing, because we had bounced here. This candle was solid green. We broke over this support or this resistance, and we broke the high of this candle that bounced. So that was my entry trigger. If I see it, if I saw it today, I would take it today. If I see it on Monday, I would take it on Monday. This is the strategy. So I entered. The execution was perfect. The trade didn't work. So there's nothing wrong with this. There's nothing I did wrong. There's nothing. I'm not going to sit here and say, well, the next time I'm just not going to do it. Because the next time it may run up and make new highs, and then you'll be crying about that. So you've got to be consistent. If you haven't learned anything this month, consistency. Not worrying about if you're losing trades. Stay consistent in your execution. The market will come back, and by the end of the month, you're going to make some money. So Here, I tried to catch the bounce here. I was determined to trade this thing and it to come back, but it didn't. It hit this level and it fell back, and so I ended up getting out. And then I shorted it because by then it was time. It was just telling me a short all the way, so we shorted it, covered it some here at the 50, and then we bounced. Ended up having to take it off, but my focus on this was the opening range. I executed it as perfectly as I could. And the way you grade yourself was your entry. Did you enter when you were triggered and you didn't hesitate? Did you hit your profit targets, or did you move them because you thought you didn't want to lose on the trade? If you moved it, was it based on price action, or were you watching your P&L not wanting to go red? That's another issue when you're worrying about your win-loss rate. You'll take profit because you don't want to take a loss. If you're monitoring your win-loss ratio and you think you need to keep a 60, 70%, or 80% win ratio, then you're going to cut your trades off. And that hurts you because you'll start cutting your winners off too soon, letting your losers stop you out, and your profit margin gets skewed. So that's another reason why you want to stay away from that. But that was K yesterday. It's just a grind. But like I said, we traded Apple, TVIX, Facebook. I jumped in TVIX with 500 shares, and you saw how volatile that was. So that shook me up. I'm not comfortable trading something that volatile with that share size. Not the way that thing was bouncing. All right, so today was not a very good day. I'm telling you, this today was one of the most frustrating days of this year for me. You could see every trade I took, I had the right idea. It was exactly what I envisioned it. But look, here is a 5-minute opening range breakdown. I got in, perfect entry. We could not. My plan was to take profit here at the pre-market low. Never made it. It bounced, ended up stopping me out, and then it came back and it made the move. Things sold off all day. I can't blame anybody but myself because I disengaged. I didn't stay engaged in this stock. And one thing, if you guys remember, the one thing I teach you, stay engaged. If it stops you out, fine, stay engaged. I was still dealing with some issues from yesterday and did not stay engaged in this, and it came back and made a huge move. I would have made a ton of money today. Instead of losing $275, I probably could have made $600, $700 today. But that woulda, coulda, shoulda don't pay the bills. This was not an execution mistake on this first trade, but there was an execution mistake by not staying engaged. And I've got that note right here on my monitor right now. It's stay engaged. To remind me, stay engaged. Don't disengage. These stocks that are in play, even though they throw you off the horse, you got to get back on, son. And I just didn't do that today. Then SQ. I missed the entry on this, the 3-minute opening range. I was looking to jump in. But the other thing that stopped me was the RSI was below 20. So when I saw that, I kind of disengaged from this for opening range trade, and I was going to wait for the trend continuation. So I did this according to plan. I disengaged from the opening range, which if I had gotten a 3-minute, this thing would have been really profitable. But if I see this next week, I'm going to execute it the same way. I have a rule: if the stock is below 20 RSI, I'm not going to do an opening range short. I'll wait, try to catch a trend continuation. So that's what this was here. We bounced, rejected up here, caught the trend continuation, hit my first target, and then it abruptly bounced and took me out. And you can see it actually recovered and never really came back. So this is just one of those that it didn't follow through. It failed. Even though we made money on it, I think, how much did I make on this? Like $118. Even though I made $118 on it, it still, the setup still failed. It failed to follow through. So the only reason I made money on this is because I stuck to my execution plan. So that was SQ, the only ticker that I'm green on. So now Facebook. This was, I'm sick of this damn market. I'm going to jump in a trade, and I'm going to try to hold this the rest of the day because I think the market's selling off. All right. What strategy is that? Maybe you know, because I sure as hell don't know. And it's definitely not the one I teach. So, like I said, I think I was still dealing with the effects from yesterday. But I got in, and this was a good entry. Honestly, this was a good entry. We were breaking down. We broke through the lows. So this was a good, I couldn't say, well, yeah, trend continuation. You know, we were trending down. So that's kind of what this was supposed to be. But the pre-market and all the other setup stuff was not there. This was, I'm just going to jump on this because I think the market's going to go down. And I'm just going to hold it the rest of the day and see how much money I can make. That's what kind of trade this was. And that's not a strategy. And so you see, I got in, it wicked me out, and then it worked. What was the mistake I made on this? I did not re-engage. I disengaged from this. Okay, I disengaged from this. So you can see I disengaged, jumped on SQ, and then came back because we had broken down. And again, I waited for the rejection. I got in, added, and I did not mean to take this all the way off. I did not mean to close this out here. I needed to readjust my stop because I added to my position and ended up taking it off. And then I got back in and said, okay, that's it. I'm done. No more of this mess. We're not having a repeat of yesterday. So I got in it. I gave it a ton of room, just like I would any other all-day hold, and just walked away. I was not looking to trade anything else that today unless the market tanked. And I shut it off. I put in my little orders and I walked away. And that was that. And you can see we bounced, but eventually we sold back off. I mean, it came really close to stopping me out. You know, up here. Really, really close. But it didn't. And it came down. We made a little bit of this back, but not much. Still ended the day about $150 red. on that ticker. But this was just a frustrating day. I had 2 trades that I could have made a ton of money on. I just got stopped out before the move happened. And this is what we talked about in our classes the last couple of weeks about stop placement. How tough it is in a smaller account because you can't give the room. Like in my larger accounts, I can give a stock a lot of room. Like I could have gotten in here and my stop would have been over the high of this candle here. And I would have been in this trade and it would have worked and I'd have made money. Being in a small account, even with only 200 share position, I can only give it but so much. I was only giving this thing a point. And it wicked me out just that quick. And so there's nothing I can do about it other than get back and re-engage. That's why it's so important at this level that if we do get stopped out, we respect our stop, but then re-engage the trade. Don't lose, don't get an attitude and walk away. Re-engage because the trade is there, to give us what we need. And that is profit. So we don't want to turn our back on it. So a struggle today, but end of the day red. That's 2 red days this week. But we still ended the week green. All because we managed our risk. Okay, that's key. That is 100% the key. All right, so let's take a look at where we are right now. So these numbers are going to be skewed because the month is not counting these 2 days. Okay, the month stops here. So the monthly gains is 30, 50, 26. But the year-to-date profit is going to include these 2 days, Thursday and Friday. And the week total is going to include Thursday and Friday. And I do this so that my equity curve and everything is based on, week to week. It's not month to month. So I have to use the figures for the week. So for the week, we ended up pretty strong, 11.50, 12. And you can see, and we did talk about the month of July, how we made a huge recovery. And all I did was stay consistent. I didn't change up anything. Okay. Had I traded some earnings plays this week, probably would have made a bunch more money. But I'm going to stick to my rule on that and not really trade any earnings for another week or so. After next week, we'll look and see if things are slowing down. But the reality is, if you got 170 stocks reporting after the close, things are spread out a little bit too much. And so it makes things a little bit too unpredictable for me. So I don't have an edge anymore. When I don't have an edge, it would be more like gambling. And I don't like the feel of gambling. I like the feel of having an edge. Even though technically it's still gambling a little bit, but when you have an edge, it brings another air of confidence. And my mind is clear and I'm able to make better decisions. So this is what the equity curve looks like. We are continuing that train up. This little bounce. Usually 6 to 8 weeks, you start to see a little pullback, or it starts to flatten out a little bit. You can see how here and here, this was a long stretch, about 8 weeks before we had a little bump in the road. So it's not that I'm going to put this in my head to where I actually make myself have a bad week. No, it's just that I know that this is probably going to happen at some point, and I'm going to be ready for it. So that's it. That's a wrap for this week. Sunday, we're having our weekly market analysis and swing trade session, all of that on Sunday morning. So you guys that are members, come and join us. Don't pass that up. It's a good time to come and ask questions as well, not just about swing trading. When we finish all of that, you can ask questions about day trading. When we're doing the market analysis, any questions about the market, that's what I'm here for. Okay, like we were talking about earlier, I value myself. And I value myself enough to come in and give you guys everything I got every day. Some days I feel like crap. I may have a migraine because I deal with sinuses. It's just a product of living in the South. But I still give you everything I got. And as it comes up, I'm going to give you everything I got. Now, this new program that's coming, I'm not sure how soon we're going to start it, but it was inspired by one of our members, the Trader Rehab Program, and that's going to be specifically for you guys that are struggling. You got to a point where you were doing okay, but now you're struggling with certain things. You may be struggling with sticking to your stop, or sticking to your profit targets, or you can't stop looking at your P&L, and it's causing you to make bad decisions. We're going to have exercises and things that we can do to help you guys combat that. So the struggle is real, you guys. The struggle is real. So those of you who are coming Sunday, I will see you on Sunday morning. The rest of you guys, we'll get back at this thing first thing Monday. So have a safe weekend and enjoy.